Hello, in this video you'll learn how payroll accountants determine state tax withholdings. Many states except Alaska, Florida, Nevada, New Hampshire, South Dakota, Texas, Tennessee, Washington, and Wyoming, and localities apply taxes in addition to the federal income tax, Social Security, and Medicare. And New Hampshire does not charge a payroll tax either, but assesses taxes on dividends and investments. All states except for the 9 I just mentioned withhold income tax for their employees, and many apply other taxes as well. Like for instance, employees in the state of California pay state disability insurance, short SDI, of 0.9% of gross pay to a maximum wage limit of $145,600 in 2022 and $153,164 in 2023, in addition to the personal income tax that the state levies. For 2024, though, the SDI withholding rate increases to 1.1% with no taxable wage limit and maximum withholding for each employee subject to SDI contributions. This is a significant increase in taxes for those earning more than about $150,000 with no increase in the maximum weekly benefit. However, those that earn less than the average weekly wage in California will now receive higher benefits, to 90% in 2025. Like federal income tax, California personal income tax amounts vary by income level, pay frequency, and marital status. California also offers both the wage bracket and the percentage method of determining the PIT amount due. In contrast, Pennsylvania, for instance, charges a flat rate of 3.07% on all employees for its state withholding tax. You can find additional state income tax information in Appendix D of your textbook. New York ranks as the highest state in per capita state and local income tax. The marginal tax rate in 2022 ranged from 4% to 10.9%, depending on income, and many localities charge income taxes. In 2021, the maximum tax rate was 8.82%. Workers who reside or earn income in New York City pay tax that ranges from approximately 3.078% to 3.876%, in addition to any federal and state income taxes. If a company operates in more than one state, it becomes increasingly complex to decipher state income tax requirements. Some states require the collection and remittance of income tax based upon all wages earned within their state. So, for example, if a paper mill worker who lives in Florida is stationed at the St. Mary's, Georgia location, the employer could be required to remit the employee's income taxes in Georgia. And entertainment employees, such as actors, have state taxes withheld for each location they shoot the movie in. Another mandatory tax is local income tax, and payroll accounts need to be aware of any local taxes that apply to their business. Denver, Colorado has a local tax called the Occupational Privilege Tax, OPT, also known as the head tax. The OPT is $5.75 per month for employees and $4 for employers of any business with any activity in Denver, even if the employee or business does not exist or reside in Denver itself, on wages exceeding $500. The local income tax is applied after any pre-tax deductions. So let's look at a few examples of calculating the net pay when state income tax is being withheld. Our first example is for Angel, who receives a salary of $850 per week at his job in Joliet, Illinois. Angel is married, filing jointly. Box 2 is not checked. with one dependent under 17 and is paid weekly. We will use the wage bracket table in Appendix C to determine federal income tax. He has pre-tax deductions of $50 for insurance and $50 for 401k. So let's calculate his pay together. We'll start with a period wage of $850 and next calculate the federal and state taxable wages by subtracting the 401k and insurance contributions of $50 each from the period wage for $750. This is the amount we will use to calculate the federal and state income tax withholdings. Now we'll use the federal taxable wages to look up the preliminary tax withholdings in the wage bracket tables. Be sure to use the weekly payroll tax table and find the correct row that includes the wage of $750. For Angel, who is married filing jointly, it is the standard withholding because he did not check box 2 on the form W-4. The amount is $25, but that's not the final amount yet. Angel also gets credit for having one dependent under 17. Each dependent under 17 is worth $2,000 annually. So we divide the amount by 52 for the weekly amount of $38.46, which brings the tax withholding to 0. Next, we calculate the FICA taxable wages by subtracting the pre-tax insurance contributions of $50 from the period wages to arrive at $800. We multiply the $800 by 7.65%, or can also separately calculate the Social Security and Medicare taxes for a total of $61.20. What's the next step? The next step is to calculate the state taxes. The wage base for state taxes is the same as the federal wage base, so that's $750, which we will multiply by 4.95% for Illinois. The only thing left to do is calculate the net pay by taking the gross pay and subtracting all withholdings and deductions, including the 401k and insurance, for a net pay of $651.67. The second example is for Elijah, who is a full-time employee in Austin, Texas, who earns $4,420 per month and is paid semi-monthly. He's married filing jointly with one dependent under 17 and has indicated step 2 checkbox withholding. He has a qualified health insurance deduction of $50 per pay period and contributes 3% to our 401k, both of which are pre-tax deductions. Her additional withholding amount for step 2 is $150.75. So what's her net pay? Let's calculate her net pay together. We'll start with a period wage of $2,210 and next calculate the federal and state taxable wages by subtracting the 401k, the contribution of $66.30, which is 3% of $2,210, and insurance contributions of $50 each from the period wage for a total of $2,093.70. This is the amount we will use to calculate the federal and state income tax withholdings. We then look up the amount of $2,093.70 in the semi-monthly tax table. We find the correct row for the wage and the correct column for married filing jointly with checkbox 2 on Form W-4 checked, and the amount is $177. We now calculate the credit amount for the dependent exemptions, which is $2,000 divided by 24 for semi-monthly payroll, and come up with a credit of $83.33, which gives us a net amount of $93.67. We then add the additional tax withholding for step 2 of the Form W-4 of $150.75 for a total of $244.42. Next, we'll calculate the FICA taxable wages by subtracting the pre-tax insurance contributions of $50 from the period wage to arrive at $2,160. We multiply the $2,160 by 7.65%, or you can also separately calculate the Social Security and Medicare taxes for a total of $165.24. There's no state or local tax withholding, so all we have left to do is subtract the 401k and insurance contributions for a net pay of $1,684.04.